Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland, and I'm the aggressive growth stock strategist here at Zacks. I've got a stock pick, and then coming up, we're gonna hear from my friend and colleague Kevin Cook from Cook's Kitchen. He's gonna come in from cooking up some great stock picks, and he's gonna give us his pick. But let's just jump right to mine. I like Cross Country Healthcare, CCRN. So let's take a little look at that stock. Yeah, so it's Cross Country Healthcare, and it's CCRN is the ticker. Right now, it's a Zacks rank number 3, and it's got a value divergence. Normally, I like to talk about stocks with a growth divergence, meaning a strong growth style score and a weak value style score. But in this case, we've got a D for growth and a B for value. So not my usual thing, but in this corrective market, you got to change it up. Look for certain other things. Look for value down here, and I think that there's good value here. And I think that why is there good value? So let's just run through that, talk about it real quick. So here's our earnings history. We've got beats, a nice gigantic beat right there. A little beat right there, and then a good sized beat. So they all average out to be about 29%. That's nice to see. A lot of companies are missing lately. Then we take a look at the estimates. This keys us into the Zacks rank. $1.29 to $1.35. That's going the right way, and we like it. 90 cents to 96 cents. We like that. 457 to 477. We like that. And 298 to 303. I mean, those are little small bumps, but we like it because it's stability. The market likes stable things that are trending higher, and that's exactly what we have here. But when we take a look at the valuation, we see that's where we really get something here. The forward PE, 4.4 times. When we compare that with our growth number, our sales growth number of 140% year over year, I mean that's what we call in the old days before there were computers. This does not compute. A very low forward earnings and a gigantic amount of growth. So our price to book is 2.2, 2.3 if you round it, if you're intelligent and round it. I wish I could be intelligent and round it, but I didn't. But the idea there is this is a service company, and these service stocks are all getting beaten down in this thing. The inflation has hurt anything that is a service. It has helped anything that is a hard good commodity, something like that. So this stock has been beaten down where it has, the earnings are good. Price to sales less than 1. We don't like that, but what are you going to do? Operating margins, we got an NA there, but obviously an improvement here. So those are good things, and I think that at 4 times, this is a great story here. And let's look at the chart, and this really will explain it. And I think nothing explains it as good as this line here that I'm kind of retracing over. This is, and I'll back this. I'll delete this line when I'm done my expert skills. Well, I can't draw a picture, but I sure can trace. 2022, that's this year, and that's the earnings estimates and how they progress for this year. But we can see that the stock, doing this sort of thing, going down. We don't like to see that, but that's what it is. But the earnings, as stock earnings keep moving higher, and I suspect we'll see the same thing for 2023, moving much higher. That should help the stock get back up to the mid 20s, to the high 20s. And then test the 30s. It might take a little while. This downturn in the market is a difficult thing, and stocks are moving lower, but that's what happens. Okay, and that is that's CCRN. That's another little deep dive into Cross Country Healthcare. It's my top stock pick for the week. I like it. The earnings are looking good, and estimates moving up. Now I'm going to kick it over to my friend and colleague Kevin Cook, the man that does Cook's Kitchen, a great video series. You got to be watching that. So take it away, Kevin.
Thanks, Brian. My top pick is Synopsys. This is a key player in the design of semiconductors, and you really want to pay attention to this because I'm going to describe that specific industry niche and tell you why the stock is a buy now and going forward. This is a key player in the design of semiconductors. They do something called electronic design automation. So this is the software that lets an Intel or an NVIDIA or a Micron basically design their chips. An engineer sits at a workstation and can zoom in and, with a stylus, move different modules around to design the exact integrated circuits they want. This is their website here. I want to just point out there's a lot of terminology here. Like when we talk about semiconductors, we think of the companies who make the chips, so Intel, NVIDIA, Micron, and then we think of the wafer fabrication equipment, WFE. So that's Lam Research, Applied Materials. They make the heavy-duty equipment that slices the silicon wafers. And then you think of the fabs or foundries like Taiwan Semiconductor and Samsung. So this is another key player. This is the software, the brains to design the chips. So you can learn a ton on their site. The other company here, it's kind of a duopoly, is Cadence Design Systems, which I own for Zacks Taser Trader, and I've profiled Cadence Design Systems, CDNS, many times. But Synopsys is the other big player. And I'm going to show you why the stock has held up so well. It's just, it's really an incredible story right now as the rest of semiconductors go down. So here's a look at their website. Designware IP. IP stands for just what you think it would, intellectual property. Because when you think about it, a circuit board could have intellectual property from several different players. Intel and NVIDIA work together. Intel might work with Samsung. Intel works with Dell, obviously. So there's different IPs that might end up on the same integrated circuit board, and so Synopsys allows chip engineers to put these things together and protect IP, obviously, from tampering. I just want to draw your attention to one other acronym here. SoC stands for System on a Chip. System on a Chip designs. This is what a company like Synopsys and Cadence allow to happen. Recently, Synopsys just got TSMC is Taiwan Semiconductor, got certification for some of their new platforms in design. Because not only are your semiconductor manufacturers, their engineers are using a Synopsys platform to design chips, but this has to integrate with the foundry or the fab, Taiwan Semi, in the manufacture. So this is a good article on Zacks.com from June 14th that explains, some of these, you're really getting in the weeds here when you look at the semiconductor industry. PPA stands for Performance, Power, and Area for complex advanced system on a chip designs. So really technical stuff here. And why is this so important? Because we've gone into the universe of sub 10 nanometer, right? That's smaller than the coronavirus. The coronavirus is like 50 nanometers big. We're designing chips and circuits and transistors at 7 nanometers, 5 nanometers, 3 nanometers. And this is what Taiwan Semi is able to do because of designs that come from these electronic design automation firms like Synopsys or Cadence. Sometimes also you'll see the acronym SDE, System Design Enablement. And Cadence calls their brand of it Intelligent System Designs. So let's look at the estimates and see why Synopsys is currently a Zacks #1 rank. You can see that here. So let's scroll down to the detailed estimates table, because that's the page I'm on, detailed estimates. And you can see approaching $5 billion in revenues for this fiscal year, which ends in October. That's 18% growth. Still projected to grow 11% top line next year. EPS growth is looking great here, nearly 24% this year, and already projected 16% next year. You're not seeing this with all the chip manufacturers, and you're definitely not seeing it with software. So this is a standout, and I'll show you the chart in a moment here. So estimates have been bumped up recently. So in the past 2 months, we've gone from $7.90 to $8.47. Next year went up significantly too, from $9.17 to $9.79. So that's why we've got We've got 3 analysts in the last 60 days bumped up their targets. So we've got significant magnitude of upward earnings estimate revisions, and we've got the agreement among 3 analysts after a beat and raise quarter reported recently. All right, so let's go to the chart and show you real quick what stands out here when you look at the performance during this bear market. What has Synopsys done? Well, it bounced off these May lows, and we're above them while everything else is lower. The majority of stocks took out their May lows. The indexes, software, semiconductors as a whole, the SOX index is making new lows below May. Synopsys is holding up, and both Synopsys and Cadence, they're not cheap. They trade in the low teens multiple per sales, price to sales. Not cheap, but they're in such demand. This is because anybody, Intel, Nvidia, Micron, Qualcomm, their production plans, they think out in terms of 5 to 10 years. So that's why this software to design these chips is in such demand, and that's why these stocks are holding up. So I think it's a buy now, and these will recover the most strongly. I mean, look at that chart; it's just beautiful. While the rest of the market's tanking, Synopsys is just holding up beautifully. So that is my top pick for the week. Thanks for joining me in this week's top stock picks. I want to draw your attention to this week's promo. You can get a copy of Finding Number One Stocks. This is an excellent book by Kevin Matris, where he goes into the details of how the Zacks rank works and how to use it to pinpoint stocks that are on the move because of upward earnings revisions. All right, we'll see you next week.